Alrighty, welcome back. Happy Sunday, everyone. How we doing? Let's get audio check here on my end. All right, should be good to go. Happy Sunday, everyone. How we all doing today? Slim, hello, hello. Happy Sunday to you. Brian, good day. AT Sundays, absolutely. Ready to get back to business. Hope you guys are as well. Jeff, hello, hello. Eslam, good afternoon. James, happy Sunday to you. Alrighty, guys. Ready to get back. Looking sharp, thank you very much. Ready to get back to business here today, guys. We have NFP week ahead. Crazy things going on in the markets, right? Indices up, indices down. We're going to cover all those details here today. Going to go into what I'm looking at for dollar, bonds, and then we'll wrap up with the stock indices. Any questions you guys may have, I will also make some time for Q&A at the end of the session as well. So glad to be here with you guys. Where's everyone tuning in from here today? Sweden, awesome. Got quite a few people tuning in from Sweden, Canada. Alrighty, quite a few Canadians. Awesome, awesome. Washington State, yes, sir. Good old USA. Grenada, okay. Got people from all over the place here today. Awesome. Hey, Kevin, happy Sunday to you. Live from Nigeria. Absolutely love me, not some Nigeria. Shout out to all the Nigerian folks out there. Cyclops, my man, Kevin, happy Sunday to you. All right, guys, let's go ahead and get into the business, get into what we're looking at here today. So it is NFP protocol. So essentially what that means for me, Birmingham, Alabama, awesome. What that means for me is I'm looking to get my setup Monday, Tuesday, and that's the game plan for NFP weeks. So even though Monday, yes, there is no news here. However, on NFP weeks, Mondays are days I'm actively looking for price runs. I'm actively looking for setups. Generally, Mondays aren't a day we like to trade, especially if there's no news. Not that there's not setups, it just tends to be more of the accumulation phase of that weekly range. So saying that to say NFP week, Mondays are absolutely Mondays. I'm in there looking for setups and actively trading. So we're going to be getting down to business Monday and Tuesday. And then the rest of the week, I don't much care what the market does. I'll be watching it, but from afar, I'm only looking to take risk these first 2 days. Sometimes I will come back NFP Friday and see what we have after the NFP print going into 9:30. And sometimes I'll look for setups on Friday, but that's something that I have to see what liquidity, what inefficiencies we have. Is the market clean, and is there low risk, high probability opportunities? And that's usually something I have to see when we get into 8:30. But again, most of the setups that I'm looking for are going to occur Monday going into Tuesday. So that's the economic calendar. Let's get into what we're looking at here for today. Before we get into stock equities, we'll cover that in a moment, but we'll start with the US dollar. All right, so dollar weekly chart. We've been seeing small range bodies the last 2 weeks. And again, the reason for that is because after we saw this huge expansion to the downside, targets reached, markets are more likely to consolidate, which is why my bias has been more neutral to bearish. Bearish simply because the market's been going lower. And again, I'm not really trying to call a bottom in a market that's cratering to the downside. So the bias has been bearish, and you can see we got a weekly expansion to the downside last week, but the bias has also been neutral. So it's been bearish to neutral simply because we've already seen a huge price run. I've learned over time, it's better when I see a big price run and I get major long-term targets delivered like these equal lows. I've learned from my experience it's generally better to be patient. And the way I learned that was I'd see big price runs develop, right? Most of the time, especially early on, I would miss the entire run, not be able to anticipate it. Market would deliver, and then I'd be taking a bunch of trades in this type of price action that you're seeing here late to the party, right? So you can all agree that we've been in a bit of consolidation. Yeah, the market dropped, but then it pulled right back up into the range. But this is more difficult price action to trade, right? So for Forex traders, if the market's been more difficult with dollar-based pairs, it's probably because we're not in a higher time frame expansion profile, right? So you can see why that would be a bit more difficult and why it's better to anticipate that. When I first started, I wasn't able to anticipate it, right? And I'd see targets delivered, and then I'd be taking a whole bunch of trades in this, wondering why I'm grinding my account down. So that's why generally I like to be hands-off, wait for more information, whenever I get major intermediate term targets delivered. But for this week, what I'm going to be looking for, based off how we closed last week, trading lower, rejecting these lows and snapping higher, I will be looking for this weekly fair value gap as well as this breaker here. So I'm going to use those two levels as a target for the upside, and that's what we're going to be looking for the weekly bias for this coming week. Ideally, we'll stay above the 50% of this wick here if we're going to trade up into that weekly fair value gap, and that's something I'll be looking to confirm when we open Monday going into Tuesday. Working down into the daily chart, pretty nasty price action we've been seeing, again, after we had all these targets delivered to the downside. What we're in between right now is this up close candle and this down close candle, and you can see we're just printing pretty nasty price action in there. So again, the bias is neutral, but gun to my head, right? If I had to pick a direction, I would look for the buy stops here and then the buy side here on that daily chart. So if I had to give you a bias, I'm looking for these higher prices. But again, keep in mind the context under what we're trading in right now. So I would wait for a displacement out of this range, right? Whenever the market's consolidating like this, I'm not trying to predict where we're going to break out from. I'm just waiting for the market to displace out of that range, give me clear liquidity and efficiencies, market structure to work with, and it makes for much, much easier trading instead of trying to push in a market that's not really going to go anywhere, right? So what I'm looking at is, as long as we remain above this down close here, I'll be looking for the daily chart to trade higher into the buy side here and then that weekly fair value gap. All right, hourly chart, we can further see relatively equal highs here, right? So buy side equal highs here, and then we have all these equal highs here. So I suggest as long as order flow remains bullish, market structure remains bullish, looking for the relatively equal highs here and these relatively equal highs here, and that takes us into that weekly gap. If I was trading currency this week, on NFP week, again, it's the same thing if I was trading index futures or foreign currency. I would be looking for my setup Monday going into Tuesday, and all I need is one price run that makes sense to me early in the week. I get paid and I keep it moving the rest of the week and come back the following one. So what I would be looking for FX would be higher dollar, which would mean lower euro and lower pound. So I'm looking for the market to trade higher into the buy stops here and here if I had to pick a direction. But again, do keep in mind this rangy profile that we've been in for about, how long? Yeah, so about the past 2 weeks, right? After we had those targets delivered, the past 2 weeks have just been really sideways price action. So gun to my head, looking for buy side. But again, we have to remain bullish with the market structure. Wouldn't want to see this low taken out and ideally treated as an intermediate term low. So going into the bond market here, I want to take it from the monthly chart. Bonds have been really difficult to see sustained price runs. And the reason for that is because we're inside this monthly consolidation here. So all the way back to 2023, late 2022, we've been inside this consolidation range here on the monthly chart for bonds. So when the monthly and the weekly chart isn't expanding and it's in a range bound profile, it's going to make it harder to frame easy low resistance liquidity runs on that daily and hourly chart, which make it much more difficult to predict longer term price swings. So right now I'm waiting for more information in bonds. I don't have a macro direction as to where I think we're going to trend for the next couple months, again, because we're still inside this range here. And one thing I do want to cover, because the entire financial system that we have right now, right, it's fiat based, the linchpin of the entire financial system is the bond market. So if bonds aren't trending, it's going to make it more difficult to predict currencies, index futures, commodity markets, because everything is going to derive its value based off the debt market interest rates. So it makes it much more difficult when we're in an environment where the bonds are being held in a tight consolidation. So just wanted to throw that in there. That's why we've been seeing more difficult price action in the past year or so, because bonds have not been trending. So dropping down into the weekly chart now, we can see, just zooming out at first glance, we're in a really nasty range here, right? Ranging up into the premium end of the range, back down to the discount end of the range, and then back into equilibrium, right? So we're just seeing a lot of back and forth price action, which is making it difficult to see sustained price runs in other asset classes as well. So with that in mind, we'll drop down to the daily chart, and I'll give you guys just some intermediate term targets that I'm looking at right now. So on the daily chart, we've seen the market drop down. What I was looking for last week was this up close candle here, this bearish order block. I wanted to see if the market would rotate lower from there. We did not, and we're starting to see strength through this up close candle here. So what I'm looking at on the daily chart now, given that the market, let me zoom in so you guys can see all these clearly. Given that the market's dropped down here, taking out the sell side liquidity here in a discount of this range, looking from this low to this high, Whoops. Deep discount, optimal trade entry here, and sell stops taken, and then we got a displacement to the upside. From that, I was watching the down close candle here and wanted to see how we traded there. You can see the body's respecting it and displacing to the upside, signaling the market's bullish, so we're looking for higher prices. Buy stops here were taken out. Through that, I like this daily fair value gap that we have here above market price. So the initial draw right now inside the consolidation profile is just looking for this daily fair value gap. The reason it's low-hanging fruit, just very easy, quick targets, is because, again, that higher time frame isn't in an expansion profile. So I have to be conservative with my targets, because what you don't want to do in a consolidation profile is have crazy expectations for the market to reach the levels that it's probably not likely to get to as long as it remains inside that consolidation profile. All right, working further down into the 4-hour chart, further supporting the bullish bias is an SMT divergence. We had decoupled markets in the bonds for most of the last 2 weeks, right? With the 30-year, 10-year, and the 5-year not moving in the same direction, right? 30-year was dropping, while we see the 10-year and the 5-year have been held up relatively well. So we see SMT cracking correlation. This low here was taken out, and we did not see that low taken out respectively in the 10-year and the 5-year bonds. So with everything else we covered, that's bullish, and we're looking for that gray rectangle, or in other words, that daily imbalance or that daily fair value gap above market price. So that sets the initial draw for bonds, and that's what I'm looking at right now, just on a short-term basis, as long as we remain inside that consolidation profile. Alrighty, the $1 million question, index futures. Let's get into it. So let's take it from the monthly chart here. I want us to look at the dealing range from, low to high. And let's just make it, that's good. So we have this low here, this high, that creates a dealing range. The market dropped. Let me extend that right. We traded into a short-term discount, and we've cleared out the sell stops here. And then we've seen a strong rejection to the upside on this monthly chart here. So that is bullish, right? Because the market dropped into a discount and it quickly rejected, and I'll cover in the daily and the hourly chart why I think the market's bullish. But looking at how we traded away from this discount valuation, extremely bullish. So we'll talk about working up into that external range liquidity here at all-time highs, but we'll get into that in the lower time frames. So we have a discount market, quick rejection away from that, and the sell stops here. So that tells me we may want to see the buy stops for counterparty for smart money to distribute the long positions accumulated here at a discount. Weekly chart. So last week, not this last week, but the week before that, the week of April 14th, we had an inside week, right? So what that means is, again, the week before that, the candle does not take out that high or that low. So it's an inside bar, right? It's inside this previous weekly range. When we see that, we can use that insight to predict that that next candle is going to be explosive. So because we saw an inside week last week, we can expect more animated, more prolonged price swings in the coming week. So looking at last week, initially was bearish, right? Because order flows bearish on the weekly chart, not trying to call a bottom in a bearish market. But then we saw what? The market drop down, take out previous week's low, and then quickly reject to the upside. So I came into the week with an initial bearish bias. But if you look at all the trades that I took last week, they were all long setups for the exceptional one. And I had one losing trade out of all the trades I took, and that was because I'm trading in line with that higher time frame bias. So the reason I wanted to explain that to you guys is because the bias I go into the week may not be the bias I finish the week with. And you'll see how on the hourly chart, and since I'm covering that, let me just go ahead and touch on that here real quick. Let me take all the annotations off and share with you guys how I'm able to pivot, right? So initially, this is Monday's trading here. So we have Monday, Tuesday, Wednesday, Thursday, and then Friday here. Initially, we saw the market dropped on Monday, right, into these equal lows here and into a discount of the dealing range. So we have this high, this low, the market dropped down, took out sell stops in a discount. What I wanted to see, take that off, was how we traded below these lows, right? So did we just keep accelerating and breaking down to the downside? Or did we trade into a discount, reject, and trade higher and show bullish order flow? What do we end up seeing? The market drops, sell stops taken, and then we displace higher, and then we see obvious bullish order flow the rest of the week. So you see how not getting stuck in a bias is very important, and you have to know how to read the candlesticks. So if we look at this here, what do we see? Imbalance, market trades into it, support, imbalance, trades into it, support, imbalance, support, imbalance, support. But let's take that one step further. What are we also seeing here? The inefficiencies left open, right? So what's that telling you? The market is extremely bullish. And then we have this gap here. Well, it's already technically there. Market drop, took out the sell stops here below this low. And then we did what? Quickly rejected to the upside. So order flow, market structure, clearly bullish. And then look how they left this gap open here. So the algorithm did not even want to fill this gap, signaling it's extremely strong. And that's what gave me a bullish bias into these highs here, because if the algorithm's bullish, it's going to reach for one of two things, right? Liquidity and then efficiency. And in this case, we can see the obvious liquidity here after taking out sell stops, right? So you guys can see that market efficiency paradigm in action. Sell side to buy side, smart money accumulating here in the discount, indicating bullish order flow. And we were able to use that to take NASDAQ to the bank here last week. So I just wanted to cover briefly how I was able to pivot from a bearish to a bullish bias so that you guys can use that insight intra-week and not get locked into what you were looking for initially, right? It's very important to be flexible, be fluid in your analysis, and let the market tell you what it's going to do, right? Trading is not about being right or wrong. It's about making money. All right, so let's go back up to that weekly chart and talk about what I'm looking at this week now that we've covered last week's price action. So again, we covered that monthly dealing range here, which is very important, right? From this low down here all the way to this high, we traded into a discount and took out these equal lows here. From these equal lows now, we're seeing a strong rejection and displacement to the upside. So my next weekly drawn liquidity, hey Joe, happy Sunday to you, man. My next weekly drawn liquidity is going to be this buy side liquidity pool here at the 25.36 3/4. That's going to be my weekly draw. Through that, we have this fair value gap here, and then eventually these relatively equal highs here at the all-time highs. Daily chart. So last week we saw the market drop early in the week on Monday here into this down close candle. That's the level I've been watching here closely the past couple weeks because I want to see if that would act as a bullish order block, right? So I want to see this down close candle here. How do we trade inside of that range? So let me extend that through here. So we see bullish order block, the market traded down into it. Did we keep accelerating down through it and breaking down, reaching for new lows, communicating the market's bearish? Or did we see the market hit that bullish order block, displace higher, create a breakaway gap, and then keep running for the buy side? Right? We saw the market quickly reject, displace higher, and show bullish order flow from these key levels. So that's what allows me to pivot based off how the algorithm is trading at these key levels. So market trades down into this down close candle. That's a bullish order block. From there, we get a displacement higher, and then look at this strong gap higher here. I'm looking at this as a breakaway gap. Why? Because if the market is going to potentially, barring anything crazy, right? If it's going to trade up into these buy stops here, and then we have range low, range high, this is an implied dealing range. So if we're expecting this range to be materialized, I want to see a breakaway gap left open at 20 to 30% of that price run. So really like how ICT's brought the science to what it is that we're doing. So as long as this gap is left open, I'm going to treat that as a breakaway gap. And then I'm going to be looking for, first target is going to be this wick here, midpoint, this wick, consequent encroachment. Technically, it's a premium wick because it's above market price, but I just want to keep it clean. So first draw is going to be this 50% level. Through that, we then have this buy side here, this daily swing high. And then through that, we have the ultimate high up here at the 25.36 level here. So as long as we remain above this inversion fair value gap here, this one here, extend that through, use it as support on Friday, expanded higher. As long as we remain above that, I'm looking for these targets here on the daily chart. So I'm looking for higher prices on the stock market after the huge bloodbath that we saw early on in the year. And the market's showing its hand, it's communicating that it's bullish. Alrighty. And then you can see last week, right after Monday made that low of the week, Tuesday, bullish bias, Wednesday, bullish bias. I did not trade Wednesday. I was intending to. But what we ended up seeing on Wednesday was the entire daily range was priced in by the time we got to 9:30. What do I mean by that? Well, this candle was already up here at 9:30. So when I see a huge overnight run like that going into 9:30, and we already have basically a daily range priced in, that makes me very conscious of that morning session, which is why I took no trades on Wednesday. And it was just a total slaughterhouse for those that were pushing really hard on that Wednesday. So saying that to say, after the small range Wednesday, we then got a really nice Thursday price action, dipping down into this gap here, but staying in the upper half. Displacing higher, closing above this inversion fair value gap here, using it as support the following day, but also staying in the upper half. So everything is very, very bullish on the stock equities, and we're looking for higher prices. Working down into the 4-hour chart. We have this bullish breaker here that we traded down to the low of last week. So equal lows here, and bullish breaker traded down into. We then got a really strong rejection away from that gap higher, using that gap as support, gap theory, leaving the lower half open. So if the market's bullish and it's showing all these bullish signatures, and we saw the market take out sell side, we can then reasonably expect the market to then want to gravitate higher into the buy side to offset those long positions that were accumulated down here. Because order flow is bullish, I'm seeing this as continuation to the upside. So again, as long as we remain above that daily inversion fair value gap, look at the 4-hour bodies. Look at how they perfectly respect that. It's absolutely beautiful. So market dropped down into that daily inversion fair value gap. So on the upside, I'm looking for the wick midpoint here. And then above that wick midpoint, looking for the swing high here on that daily chart that we covered. If we start to see some strength through that, then I'm looking for this ultimate high all the way back here. Keep in mind though, for NFP weeks, Monday, Tuesday is when I'm looking to pick my shots. So I'm looking to get something long into these targets for specifically Monday and Tuesday. Once I get whatever price run I'm looking for, I get paid. Generally, I sit on that profit the rest of the week and come back the following week. Again, I want to repeat that because it's not just, okay, what targets are you looking for and try to trade it every day, right? You want to trade it in the most high probability times so you don't get caught up in high resistance liquidity run and just consolidation, shitty price action. So that's what we're looking at on the 4-hour chart. We can zoom into the hourly just for the sake of completeness here. So we saw the market drop down, take out the equal lows here inside that gap. Strong displacement to the upside, breaking through these highs with energy. Daily fair value gap, market trade down into it, made the low of the day on Friday, and then traded into the overnight session highs. So through that, again, on the hourly chart, next draw is going to be this dotted line here, which is that wick midpoint. And then again, through that, we have the buy side on the hourly chart. And that's what I'm looking for, as long as the order flow and the market structure remains bullish, right? But again, barring anything crazy, again, I do want to let you guys know we are in very crazy times right now. Things can change very, very quickly with a headline literally overnight while I'm sleeping. So don't marry the bias, right? Don't do anything crazy. We can see very erratic price action, again, given the climate that we're in. So just want to let you guys know this is what I'm looking for. I know what we look for is very precise. It's very consistent, but these are not market conditions. You want to start betting the farm on things that I'm calling here, right? Make sure you know what you're looking for. You're managing risk because, again, we are in very, very crazy market conditions right now, and I don't want anyone get hurt on anything that I'm sharing. So with that in mind, that's everything I had here. Covered dollar, bonds, NASDAQ, and then let's go to Bitcoin, what we're watching now. So we covered this last week. So we have this fair value gap here. If we find support there and stay in the upper half of that and treat this as a inversion. Let me see what time that formed. Yeah, so I like this fair value gap here. So watching this fair value gap here, if we can use that as inversion, accumulate there and trade higher, then we could see all-time highs on cryptocurrency again. Ethereum is well below Bitcoin though. And then we also have the SMT divergence there with the Ethereum and Bitcoin. So let me pull that up real quick. Bitcoin not taking out the lows, Ethereum did, right? So major SMT. And now we're starting to see some bullishness come into the market, right? So with that being said, we consolidated, we displaced out of that consolidation. So now we're looking like we're in an expansion profile, looking for the buy side above market price. All right, looking at these other markets here, making sure there's nothing I want to share. Soybeans, looking for these equal highs here on soybeans. All right, so that's it for me, guys. Any questions for me before we get going here? Nalab, much insightful. Appreciate you joining. Thank you very much. Amy, can you provide your thoughts on silver and gold? Absolutely. More from a trading perspective or long-term macro investing perspective? Two different perspectives on gold, right? There's people like to trade gold, and there's people that invest in the hard asset and hold it for the long run. I can cover both. The macro perspective, then zoom in, but just out of curiosity. because the macro perspective is gold is going much, much higher, right? Of course, there's going to be retracements, right, when the market is trading higher. However, gold is going much, much higher, right? And that's just the understanding of fiat currency. Debts and deficits in these the governments all around the world are going to continue to keep ballooning. Debt is going much higher, which is going to continue inflating the currency. And because of that, gold is priced in what? It's priced in dollars, right? So if the dollar gets weaker, if the dollar gets inflated, then gold has no choice but to keep trading higher because it's priced in dollars, right? Even with the levels of manipulation that we see, gold has been held for a long, long time to the downside. And I think we're going to see an absolute face-ripping rally on the shiny yellow object. So monthly chart going much, much higher. Weekly chart, let's go ahead and zoom into this. So we saw a little bit of a retracement last week here. Let me go to that. 2-week chart, 1 week, daily. All right. So working down into the daily chart now, we have a small range here, right? So this low dropped out, took out sell side. So looking at this current dealing range here that we're trading in, it'd be reasonable to see the market drop down into a short-term discount, potentially down into this breaker here, right? So we could see it trade down into a discount of this dealing range, hit the fair value gap and the breaker. And that's something that would be reasonable just for a short-term discount and to accumulate and trade higher. This low here is an intermediate term low. So I don't think this low has any business being traded down below. 4-hour chart. Keeping in mind the bias is bullish though. So even if you are going to look for potentially a short-term retracement into this range, do keep in mind that the macro perspective is bullish, right? So you want to again trade in line with that higher time frame institutional order flow as much as you can, even during these short-term retracements. You just want to be mindful that the higher time frame is still bullish, right? So that doesn't mean we go in and full leverage short gold, right? We do want to keep in mind that it is still bullish. So we do have these equal lows here. I would be interested to see how we trade inside this 4-hour fair value gap. If we remain below this 4-hour fair value gap and this intermediate term high here, my attention goes to the equal lows here, sell side here, and then that breaker on the daily chart. If we trade through this fair value gap and this intermediate term high, then I will leave the bearish bias on the back burner, and then I would be looking for higher prices on gold into new all-time highs. And then for silver, silver's a sleeper. Silver's a sleeper. Silver, I think, is going to absolutely rip. All right, so looking at silver in here, we have this bullish order block here, this down close candle. My attention would be there going into this coming week and seeing how we trade there. And if we continue higher, my attention goes to the buy side here at the 35 level. So that's what I would be watching on silver. And absolute crazy levels of manipulation here, man. $7 an ounce, crazy. How much volatility is coming into this market. I was just looking at how much they dropped it from the 35s down into the 27s. Unbelievable. All right, so if we stay above this down close candle here, I'm going to treat that as a bullish order block, and then we can look for the market to continue trading higher for silver. Watch this up close candle, though. We would want to see the market trade through that. We don't want to see it start to reject, build bearish price action inside this up close candle, though. So that's what I'll be watching for silver. FVG every week, every day, and it won't stop. Absolutely. Joe, hit that like, guys. Yeah, please do, folks. If you found something insightful here, if this video helped you out, or live stream helped you out, be sure to hit that like button. Helps us out greatly. Amy, so yeah, that's it on gold. That's it on silver. That's what I'm looking at in the near term. Chris, how do you select fair value gaps you want flipped into inversion fair value gaps, like the one you selected for Bitcoin? Yeah, great question, Chris. So the most effective fair value gaps are going to be time-based. So because if you look at the month of February here, where's the first fair value gap that we get in the month of February? It's this one right here, right? So because this is the first fair value gap of February, you see how they used it twice here when we were on the sell side of the curve. But now that we're on the buy side of the curve, this old fair value gap was used for distribution of shorts. So now if we're on the buy side of the curve, I want to see this old distribution level. I want to see it become a new accumulation level. And the timing element, the fact that it's the first imbalance of the month of February, also allows me to select that specific fair value gap. So the biggest thing with picking the right fair value gaps, or the most effective ones, is going to be that timing element. So if you can also see that these fair value gaps have been used in the past on one side of the curve, you can anticipate the other side of the curve to also use that same range for accumulation and distribution. And that's really understanding market maker models. Great question, Chris. Alrighty, don't see any more questions here. So with that in mind, guys, I do got quite a bit to do today. Appreciate you guys joining us. Going to keep this one short and sweet. Hope it was insightful. And I will be updating you guys throughout the week. It is NFP week, so the bias I set for you guys is what I'm going to be hunting Monday going into Tuesday. I'm actively going to be looking for my setups those particular days with the frameworks and the bias that I shared with you guys here. So with that in mind, guys, have a beautiful rest of your Sunday. Take care, stay safe, and I will see you guys on the next one. Bye, everyone.